Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to that closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. We welcome in our audiences across Bloomberg Television, Radio, and YouTube. Carol, an update here. Not a broad-based rally, but when you look at some of those big cap, those heavyweight names in the indexes, they're all doing their part today.
Yeah, especially on the tech side. We're definitely seeing technology provide a lot of momentum to the trade here. We were just talking with Alan Zaffron over at IEQ Capital, and he said even with concerns about a raising rate environment, something you and all of us have talked about, that he says it takes about 24 to 30 months before equities peak. So he's saying there is still more room to run here, Tim.
Hey, we're going to be speaking with Kathy Wood of ARK in just a few minutes. So I got my eye on what ARK is doing today, higher by 4.3%. That's the ARK Innovation ETF. It's up more than 35% from the lows of March 14th. We should note still down more than 50% from last February's highs, but it has been on a tear since that bottom in March.
It certainly has been. Does it own Twitter?
Well, it owns a lot of Tesla in that one, and she owns Twitter in some of her funds too.
Yeah. Meanwhile, Jen Psaki at the statement, of course, at the press briefing, talking about Elon Musk having invested in Twitter, saying, "I expect we'll continue to use Twitter." So far, the administration not put off.
Never thought about that angle, right?
Yeah, exactly.
We take a look at where we're at least though in these markets in the here and now. And you guys, I think what continues to stand out to me is when we talk about big tech, sort of the yields a higher movement that we continue to get on days like today. We were mentioning earlier on TV, Romaine, we're still above that sort of key 240 level on both the 2s and the 10s. All
right, well, you're looking at the closing bells here in New York. Look at this. The Dow Jones Industrial Average going to finish the day higher by roughly 110 points here, up about 0.3%. The S&P 500 up 0.8% here. But the differential right now that we're seeing between the Nasdaq Composite, the Nasdaq 100, and the rest of the market, one of the widest differentials that we've seen, at least to the upside, in quite some time. I'll try to look it up and get a more accurate date for you here. But you're up 1.9% on the Nasdaq Composite, about 271 points. The Nasdaq 100 up an even 2% here on the day. As for the Russell 2000, those small caps, some of those cyclical names, not a whole lot going on there. About 0.2% here on the day.
Nasdaq still down about 7%. The Nasdaq 100 down about 7% still year to date, despite that big bounce that we've seen. S&P 500, guys, almost as even split. 252 names, Taylor, showing some gains in today's session. 248 lower, 5 unchanged.
You know, Carol, it's interesting, at least on the sector level for our radio audiences, we do the sector winners and the sector losers. It is green on the winners and red on the losers. So in that sense, maybe it does feel a little bit more broad-based. But when we dive into the surface, it's interesting. Autos, we've been talking about Tesla. Of course, that's one of the big outperformers, and technology really has been in there as well, right? Media and entertainment, technology, some of these semiconductors, those are all up at least 2% or more. You come down to the bottom, and some of the losers, and many of these are those bond proxies. You are seeing yields rise a little bit on the long end, so you're getting some dividend financials and those utilities as well. Those are off about 0.5 to 1%, Carol.
All right, we do have a headline crossing the Bloomberg. Twitter gaining 27%, its biggest rally, right, since that 2013 trading debut. So let's just say it again. We've talked about it a lot here and about an hour ago about the outperformance that we saw in Twitter shares. We know the news. Elon Musk buying a passive 9.2% stake in the company. He's now the biggest shareholder in the company. So a big move there. I feel like all of my gainers are kind of connected because take a look at Tesla. We know that one's up about 5.6%. We got some news about having a record first quarter in terms of some of its order flow, record first quarter deliveries, I should say. So that gave it a big boost as well. And then Hertz Global kind of playing into this because we know Hertz is buying a bunch of Tesla cars as it expands its EV exposure. Well, they came out, Hertz saying it's going to look to buy Polestar vehicles, about 65,000 EVs over the next 5 years. So we saw Hertz really moving a lot higher, top in the S&P 500, up about 11% today, guys.
All right, you got the gainers, Carol. I got the decliners. Let's go to Starbucks. Howard Schultz is back, and he's suspending share buyback. Shares of Starbucks falling as a result, down 3.7% today. He said the cash could be better spent on employees and stores. Among the many challenges that Schultz faces as he returns again as interim CEO this time, tight labor market, soaring costs, and then unionization efforts across the United States at different stores. Digital World Acquisition Corporation. We've talked a lot about social media today. A lot of the stocks higher. DWAC, not one of those. Down about 10% today. Carol mentioned Twitter as a gainer. This is the blank check firm that's bringing former President Trump's media venture public. It fell after a Reuters report reported that 2 key executives have resigned. And then that news about Elon Musk investing in Twitter, certainly not helping either. And then Baxter International falling 4% today. The medical device maker falling after Goldman Sachs downgraded it to a sell from neutral.
Meanwhile, let's go for a macro picture for a moment. Global macro movers really paint the story that is, once again, about Russia-Ukraine. We're worried about perhaps further sanctions coming towards Russia. This on the back, of course, of what atrocities many feel have occurred near Kiev. And that, of course, has calling from the French president, from many European leaders, that further sanctions are indeed needed on Russia. Would that envelop the world of commodities? Would that mean that grains could be harder to get out of the Black Sea? That's certainly what's pushed some of the grain prices higher. Could that mean that oil could be a focus? Energy markets in particular, factoring that in. WTI crude up more than 4%. We're $103 a barrel. Brent crude up more than 3.3%. So once again, the nervousness being factored in the commodity space. And that feeds into the FX space as well. Aussie dollar catches a bid up 0.6%, a key commodity-related currency pair. The Canadian dollar, the loonie, up 0.3%. Interestingly, on the downside, of course, what is the economic impact of further sanctions on Russia? The euro off by 0.7%. So worries there as to the overall slowing growth in the EU. And I look at what is perhaps a bit of a bid for safety that happens on the day on the back of this. Gilts, I mean, currently the UK 30-year bond, we saw money move in, yields pushed down by some 6 basis points. Interesting, we heard some comments from the Bank of England today talking about perhaps, in fact, inflation undershooting when then anticipated. But we really saw money move in across the board in European debt and indeed Japanese. Taylor.
And you saw a similar story, Caroline, at least when you think about yields going higher here in full faith and credit on the longer end of that curve. It's always good to keep in mind, though, how far we've come. You think about sort of these 3 basis point moves on the front end. You got a 4 basis point move down on, at least in yield, lower on the front end, but still really above some of these key levels. Carol, as you think about a 2-year and a 10-year holding right in there at about a 240, you're just a little bit inverted by about negative 2 basis points. I think what was interesting, we were speaking with Subhadra Rajappa earlier about sort of needing a deeper inversion, and then talking a lot about not only the magnitude but the duration as well, as you really think about any signals that this market can give us about the economics.
Yeah, and listen, this is why the economic data points this week, guys. And let's just kind of broaden out here a little bit. We're also going to get those FOMC meeting minutes. And what's interesting is we'll hear a little bit about the debate, right, between the members. And maybe we'll get some more clues about what the Fed's thinking, what it's watching. I mean, we get a lot of clarity when we get the press conference, but maybe we'll get a little bit more and maybe get some ideas about maybe where yields go next.
I think so. And I mean, we talk about the last minutes that we got. That actually surprised. Normally they're pretty staid, but you did get a lot of insight out of that one. I guess the big question right now is the runoff of that balance sheet, how aggressive that could be, particularly coupled, of course, with some of those rate hikes. And of course, you talk about some of the other data that we get here, not only with those FOMC minutes here, but I think some of the inventory levels that we're going to get towards the end of the week could actually also provide a little bit of insight into maybe where we go next with regards to inflation. Yeah,
certainly. Inflation. I mean, guys, I was out you missed me on Friday, but I went out on Friday afternoon, and a local bowling alley runner, the guy who runs it, said his utility costs, there were signs everywhere saying utilities have got skyrocketed, therefore they are putting up their prices across the board. They've gone from $3,000 a month to $12,000. And that's just one small business owner in the state. But overall, we are seeing still inflation pressure, whether that factored into commodities today, for example.
Well, Caroline, I have a question. I mean, was the owner having to pass along those costs?
Yes.
To what extent? I mean, you saw menu prices move higher. You saw bowling move higher. I mean, that's the way it works.
Yeah, but it was also packed. It's because people are still wanting to be able to spend in some way. But at what point does that end up driving away demand? At what point does that overall have an impact on the way people feel as well? And is the Federal Reserve responding to that? We just had the CFO, COO of Lloyd's of London, and he was saying, well, he doesn't think the 7.9% inflation number in the US can possibly be real. He thinks it's far too high. But from a day-to-day person, I feel that many feel that is the real number.
Well, we should point out there are a lot of people who feel the exact opposite. They feel that number might actually be understating some of the inflationary effects.
And I think it's interesting. We had this conversation with Gina Martin Adams, I think last week, Caroline, when we missed you on Friday, and really talking about, at least from that consumer sentiment, you don't see them pull back yet, but you do get nervous if it starts to broaden out. So if you see inflation and you think prices are going to move higher tomorrow, so you buy today, if that starts to extend to a lot of different areas in the economy, that's when you start to get nervous. Now, she caveated that with, you haven't started to see that. You haven't seen people say, I'm going to buy a house today because tomorrow it's going to be more expensive. but those are sort of the signals that she's looking for when it comes to this broader consumer sentiment.
What did you shoot, Caroline, when you were out bowling?
I'm hopeless. I either get a strike or I get zero. There is nothing in between. So I'm like the least consistent person, and I end up like having a really rubbish
plot,
night.
right? The estimates of where rates go. It's kind of
Depends
like
at also what point in the evening.
Yes, very good point.
Oh, there's some libations involved?
Yeah, no, I just get distracted by conversation. That's all.
All right, guys, we're going to run. That's going to do it for our cross-platform coverage on radio, TV, and YouTube. We will see you again, same time, same place tomorrow.